How's it going, everybody? It's Stas here. Welcome back to another video. So the markets were all over the place today. We had the S&P go down 0.3%, the Nasdaq went down 0.8%, the Dow went up 0.2%, and get this, the Russell went up a whopping 1.4%. So today we're going to break down some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, take a sip of your coffee. You're going to need it for this one, guys. Hit the like button if you find value. And check out my Patreon if you want my buys, sells, call-outs, morning update videos, plus more. All of that's on Patreon, link down below. And with that being said, let's get right into the video. So we had a pretty crazy day today. We got news that the 10-year Treasury yield, and I did mention this in my video earlier, but I'll mention it again for those that missed it, or maybe you weren't watching the markets today. The 10-year yield increased on economic optimism and inflation fears, briefly topping 1.5% today, and that is the highest level since June, and it's up from 1.3% from the end of August. So that's a pretty big move considering end of August was just about 1 month ago. So we're moving pretty big in terms of the 10-year Treasury yield. And what does this do? It hurts the tech stocks, the big tech stocks, and the more speculative tech stocks, not necessarily just Apple, Google, Netflix, Microsoft, Facebook. It hurts the smaller ones as well, right? Because tech stocks are more sensitive to rising interest rates because higher debt costs can make long-term growth rates less attractive to investors, right? So pretty much you have the 1.5% 10-year Treasury yield. When that goes higher and higher and higher, the risk-free return seems a bit more attractive than taking the risk on, let's say, a big tech name or a smaller tech name, which is why we saw the tech stocks sell off today, right? And higher interest rates in general eat away at the future returns of tech stocks, and maybe I should make a video on that. That's a pretty interesting topic there that could be a video in and of itself. Maybe I'll do that. Let me know in the comments if you're interested in that. But overall, look, markets sold off today other than the small caps and the Dow being up 0.2%. I mean, that's really no big deal. I mean, that's pretty much break even in my eyes. But overall, it was a red day. We sold off a bit. And SPY here, which tracks the S&P 500, we're clearly still struggling at 445, which was the high point from last week on Thursday. It was also support earlier in September. We've mentioned this many times. So, in my opinion, it's pretty clear. I mean, I don't even think it's an opinion at this point, but for SPY to continue ripping up towards all-time highs, for it to continue this rally that we've seen the past couple of days, it's got to break 445, hence why I have an alert at 445. And QQQ, let's pop that up, guys. This has to break past 374. We closed at 370 today. Again, we went down about 0.8% overall in the NASDAQ 100, and QQQ, yup, you guessed it, it tracks the NASDAQ 100, right? So we got to break past even the low point from Friday, 370. We closed right around it. Actually, we're moving down after hours. We're now under the low point from Friday. So we got to break past 370, 371. We got to make a move to 374 plus on QQQ. Then from there, maybe, just maybe, we start making a move back towards 379, 380, maybe even higher from there. Let's see what the 10-year does, though. Like I said, if the 10-year keeps on trucking along up and up and up and away like it has been the past month, maybe, just maybe, we see a bit of a sell-off here in tech. But quite honestly, if I were to just bet on this, I don't really think tech's going to sell off too aggressively, right? I mean, at the end of the day, people are very, very, very eager, right, to buy the dip in a lot of these tech names. So if they start selling off, there's a lot of money on the sidelines. I believe money's going to be put to work, even though the 10-year is rising a bit, because you guys have to understand, just because the 10-year is moving up 1.5, 1.6% if it gets there, I mean, inflation's 4.5, maybe even higher percentage points right now. So the 1.5% yield, 1.5% return per year, it's pretty much worthless. You're still losing money, so people still want to be in stocks over bonds. Well, maybe if you're like 80 years old, it's a different story. But people that are 20, 30, 40, 50, which I look at my analytics, most of you guys are watching this video. Most of those people, let me know in the comments if I'm wrong here, but I think I'm right. Most of you guys, you want to be in stocks over bonds. So if the big tech names dip, I believe they're going to be bought up, and we'll talk about some of them later on in this video. Excuse me, guys. Voice crack. Jeez. Later on in this video, so make sure you guys stick it through. And on top of that, I also mentioned this earlier, Jerome Powell is speaking before the U.S. Senate tomorrow, Tuesday, and the European Central Bank Forum on Wednesday. So we're going to see if he says anything new regarding, interest rates, tapering, the economy, jobs. I mean, I doubt he's going to say anything new considering we just had the Fed meeting last week. I mean, what really could have changed the past couple of days? But either way, the markets are going to be watching it. So let me know your thoughts. Drop me a comment down below. Make sure to smash the like button if you guys are enjoying the video thus far. You probably are. If you are enjoying the video, hey, hit the like button. Make sure to subscribe as well. It really helps me out in the YouTube algorithm. And with that being said, let's talk about some stocks, right? Tesla. Oh my God, guys. Tesla ended up exploding today. It completely ripped. And if you all have been watching the channel, you're in the Patreon, we've been talking Tesla, and we said how if 760 breaks, this thing's going to rocket up, at least towards 785. And did I think it was going to happen this quickly? No, but hey, the markets, they tend to surprise you, right? That is what the markets do. And we called out the ascending triangle. Again, we've been uptrending since the middle of May, but we've been seeing resistance at about 760 since the beginning of September, right? And now that we broke out of 760, the ascending triangle is playing out. We ended up filling the gap all the way to 785, which was my initial target here, 785 being the high from the middle of April. And if you guys look, we actually broke 785 today. I think we pierced 800. Let me double check. No, we didn't. We got a dollar shy of 800. Then we sold off a bit there right before the markets closed. But either way, we broke 785, got dang near close to 800. Now we pulled back and we closed above 785. This is a very, very, very bullish sign for Tesla. And hey, I mean, we said this last week maybe. If Tesla were to break 785, it might start making a push towards 850, maybe even 900 now towards the end of the year. That's very possible. Considering Tesla, it's pretty much been a dead stock the past half year. I mean, yeah, pretty dang close to a half year since, it's actually been more than a half year. Since the beginning of March, Tesla hasn't really done much when you're looking at the stock price. But yes, if you look before that, the stock did very well. So it makes sense that we've had a down year so far. It makes sense. Not everything is going to go up a ton. But the fact that we were bouncing around 780, 800, 500 for the past, couple of months, now we're finally showing some momentum out of these big resistance points. I think, technically speaking, this could be setting up for a pretty gnarly rally here over the next couple of weeks, months. And if you're positioned in Tesla, whether it's options, shares, whatever, you're making money today. And you have been the past couple of weeks, months, year, 2 years, of course, depending on when you got into Tesla. And full disclosure, I'm long Tesla, so I'm making money right along with you guys if you're in the stock. So TSLA, awesome move today. It's ripping, very bullish, multi-month high. It's looking fantastic. ACB is stock number 2, which they reported earnings today. Let's see if they did, because last week they were supposed to, and they didn't. And they pushed it to today, and I didn't see what they reported yet, or even if they reported. So let's see what the heck's going on here. What do you know? Doesn't look like they reported. Come on, man. What the heck's going on with these? Actually, never mind. They did report. The stock's just, is it stagnant right now? Well, actually, no, it's not, because it went up 7% on the day, probably in anticipation of earnings. So it went from 589 at market open, hit 654 after market hours. That's a pretty big move of about 10%. And you guys can see it's been very choppy after hours. So what did they report? Let me pop the live news tab up. They did Q4 adjusted EBITDA loss of $19.25 million versus the loss of $33 million same quarter last year. Okay, that's a good sign. I mean, the loss year over year is narrowing. That's good. I mean, the fact that they're not bleeding as much money as they were last year, can't complain there. And sales came in at $55.73 million. Or is that Canadian dollar? I think that's U.S. dollars. Either way, they beat sales, $55.73 million versus $47.16 million estimated. And do we have any guidance here? Not really seeing any guidance, but overall, 7% green day throughout the day. The stock is up a tad here after market hours, and overall, we're still not out of the downtrend. So for me, I want to see ACB break out of at least $7 per share. I need to see it get out of both moving averages, and from there, maybe we start seeing a breakout. And for me, honestly, I think to get this stock back over 10, $12, $15, we have to see the whole MJ space come back in general, because all the stocks for the most part in the space have been hammered. We got to get something, a big piece of news, legalization in certain states, countries, whatever, federal legalization. I don't know. We need something that is going to move these stocks again, because they've been in a multi-month bear market. I mean, look at MJ. This is an ETF. The ETF was $35 back in February. Now it's 15. It's down 60%. So we need something to just shock these stocks back to life, because they're just dying at this point. We just need something, guys. Goldman Sachs, banks crush it today. I mean, with interest rates rising, bonds going up, this is good for banks. GS up 2.3%. Goldman Sachs looks pretty good to me. You know, we pulled back a good amount from 420. That was back in the end of August. We hit 374. That was recently, about a week ago, roughly. That was a pullback of 11-12%. So GS got into correction territory, and now it's clearly recovering. You know, it's continuing the uptrend. We held a higher low at about 370. The previous low was 350. The one before that was 349. And now with today's move of $9 over 2%, we're actually moving above both moving averages, and we closed above both moving averages. So Goldman Sachs looks pretty good to me. You know, I think this could be a V-shaped recovery type stock. We got a sharp sell-off last week, or the week before last week, and now we've had a couple green days in a row forming that V. So hey, some short-term targets I have, 411, 410. That was the high from mid-September. If that were to break, 416 to 420. You know, that's where we could be headed. So keep your eyes on GS, and not just this one, but all of the bank stocks. You know, JP Morgan's breaking out. This one looks really good. It looks like it wants to hit all-time highs, maybe as soon as tomorrow. BAC, let's see what that's doing. You know, this one's breaking out. Very similar to JP Morgan. It also looks like it wants to hit all-time highs. So watch out for the banks here, and the tech stocks. You know, just because we're selling off a bit, excuse me, guys, in tech, it doesn't mean we're throwing those stocks out the window. No, that's foolish, right? Because I believe, like I mentioned earlier in the video, there's big money waiting to pick up the dip on these stocks. You know, Google, Apple, Amazon, and a lot of these are down a decent amount. Google, not that much. You know, Google being my favorite stock out there. You know, if I had to pick one stock for the next 10 years, it's going to be Google. This one's not down that much. It's only down about 3-4%. But if this thing gets down like 7, 8, 10% from all-time highs, I don't want to guarantee anything, because nothing's guaranteed, but I'm willing to put my money on the line that it's going to go up if it dips 7, 10%. I mean, that's all big money needs to see to pile in. And even the retail investor, you know, even me, I'm a retail investor. You're a retail investor. We're going to be buying Google for the most part if it goes down more. Heck, I might even buy more here. You know, it's down 4%. That's not that much, but it's decent. A decent dip to add a little bit. You know, maybe a fractional, not a couple fractional shares. It would only be one. It wouldn't even be one fractional share. It would just be fractional shares, right? I don't even know what I'm trying to say here, but I'm willing to pick up a little bit of Google here. You know, it's up, it's still uptrending, riding the 180 SMA, which has been support the past couple of months. And ultimately, if we break out of this wedge that we're in, it's going to probably shoot back to all-time highs. Whether that happens next week, a month from now, whether we sell off 5% more from here, then rip back out, who knows what's going to happen. But I truly believe that the Treasury yield, it going up, it's really not too big of a threat right now. I'm still going to be invested in these stocks, buying these stocks on any dip more than 5-10%. I mean, that's just what I'm doing, guys. I'm being completely honest here with all you out there. And Apple is down a little bit more than Google. It's down about double. Google being down 3.5%, 4%. Apple's down about 7-8%. And that is because of the whole fiasco with Epic Games. That sent the stock tumbling, right? You know, they're in a little bit of a pickle because now they're going to lose a good chunk of revenue from the App Store business, which we're not going to talk a lot about in this video, but I believe it was they take 30% of a cut there, which is a lot of money Apple's making, guys. And I saw a comparison. The revenue that they make just from the App Store business, the segment of the business, overall business, it's more money than a lot of these large cap companies make. I don't want to name these large cap companies because off the top of my head, I forget which ones they are. But a lot of large cap companies, think about it. This goes to show how big Apple is. They don't make enough or as much money as the App Store does for Apple. It's freaking crazy. So I'm going to stick with my alert here at 150. Maybe I'll lower that a bit. Maybe I'll put it at, let me redo that. Let me set an alert at $148 per share. And if that were to break and we start moving above the moving averages, we start taking the highs out from mid-July, late July, early August, that could be a sign that we're recovering back up on Apple. CCL, holy crap, guys. CCL is completely breaking out. If you all remember, we called this one out before earnings. We talked about how it was likely to fill to the top of the channel, which it ended up doing. And I told you all, look, if it breaks out of the top of the channel, which now it's doing, today it had an almost 4% green day, there could be more upside if it took the top of the channel out. And that's what we're doing. So at this point in time, yes, we are a bit overbought, a little too hot. Maybe we do retrace a little bit. But overall, I think CCL looks pretty good. You know, if we get a dip, 25.50, 26 even, maybe 24.50, 25, I don't even know. If we get a dip, I think CCL is going to be a decent buy here, especially now that they reported earnings. We see 50% of their fleet is going to be restarting by October, which is literally a couple days away. So this is good news, good stuff coming out of Carnival Cruise Line. And I think this move could continue. You know, after we got that initial dip back in, when was that? June into July. I think that's when the Delta variant started creeping up. And a lot of these travel stocks got hit in fear of that. And this was back when I was in Hawaii. If you guys remember, I was in Hawaii about 2.5 months ago. I remember, no joke, I bought Carnival Cruise Line at 1960. That literally at 1960. Of course, I sold it since then. You know, I was trading in and out of it. But I remember that. You know, I saw that as a buying opportunity. And if we get another dip, I think it's going to be a buying opportunity again, depending on where we end up going. And if you guys want all my buy, sells, call outs, make sure to check out my Patreon, which is linked right down below as always. And the last stock for today, before we wrap up this video, is Snapchat, SNAP. Snapchat broke out of the downwards channel. That was last week, right? We had a nice move from $76 to $83. Big move of about 8-9% last week. Very solid. We're trading above the moving averages, right? Golden cross, all that good stuff. Looking pretty bullish. And I told you all, look, Snapchat, it's a little hot, overbought. And today it sold off 4%. Now, this is where I truly believe could be the opportunity. Maybe not yet at $80, but if we start coming back to 77, 78, maybe if tech stocks fall a bit tomorrow, they slip a bit more. Snapchat probably will slip as well. right around the moving averages, 76, 77, 78. That is where I believe buyers will start stepping in. I mean, look, here after hours, it's already selling off a bit more. Now it's at 79.99, and it closed at $80.08. So this could very well go lower. And again, we could be able to get a dip buy within the overall breakout, which is always nice, especially if you're looking to swing trade it for at least a couple days, maybe a week or two. I don't know, depending on your time frames. I think it's going to be pretty decent. So that's pretty much it, guys. We talked about Tesla, ACB, Goldman Sachs, Google, Apple, CCL, Snapchat, and I gave you all some insight around, interest rates, treasury yields, Jerome Powell, a little bit of my thoughts there. So if you all enjoyed the video, make sure to hit the like button, subscribe, drop me a comment, let me know your thoughts down below. And again, check out my Patreon if you want my real-time buys, sells, call-outs, morning update videos, plus more. All of that's on Patreon, link down below, or you guys can go to StasserFest.com/Patreon. Get your $30 from M1 Finance, your 2 stocks from Webull as well. Those are free, link down below. And that's it. I'll catch you guys in the next video. I'll pop one up here. I went over a couple stocks earlier that I'm watching right now, 2 of which I bought already today. So if you want to see that video, we didn't talk about the stocks. And this one, check it out. I'll pop it up here. I'll see you guys there. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out, guys.